If we move back up, as I expect with the other markets, if we have this rebound in Europe and the S&P, then we should be back in the trading range.
So Bruno, there's been a lot of volatility in the US market recently.
Yes, indeed. Let's look at this chart of the VIX at 3 months, VXV. And we noticed here on the right side of the charts that there was in the last 5 days a big increase in volatility from 16 to 21%. Now, it should be noticed that we're probably closer to some resistance level, now near 21 or the equivalent of 20 for the VIX index.
So what is your target for the correction on the SP 500?
Well, let's look at what just happened in the last 5 days. During last week, we had a rise to almost a new high above the 2111 levels at 2120. But in the last 2 days of this rise, the VIX was already tipping off that it would come with a correction later on. And it was rising, which is unusual when the S&P is still rising. Of course, the VIX was correct in the sense that some people anticipated a correction and bought some protections. And we have now these 3 or 4 days of correction down, all the way to what we called the cloud, this green area. This is usually an area where there is some support. And you see that the price action yesterday confirmed that because we made a spike into the clouds and closed back above it. Also, the momentum has moved a little bit from overbought to now oversold. So we need not to forget that this price action all occurs with a rising, which was a flat moving average 200 days, which is now still a little bit rising. So we still are in basically a bull market.
But is the weekly momentum not turning down?
Well, it's true that the weekly stochastic that we see here on the lower part of our charts is crossing down. But the longer term measure of the MACD is still moving up. So basically what we have to look at longer term is that we had a descending trend line, which has been broken up in April. It pulled back on it and made a new highs, and now it's just a pullback. So true, we could say that the maximum risk is probably the weekly cloud, and this weekly cloud is at the 2025 level.
Are some US sectors making you more optimistic?
Yes, I think what we need to realize is 2 things. The first, on the upper part of the charts, we have the relative strength of the technology sector versus the S&P 500. And we see that even during this correction down here, that relative strength was relatively stable and even rebounding a little bit. So it's not a huge correction which is attacking the technology sector. As well, we notice that on industrials, we have also a small correction, but it's still holding above our rising trend support, reaching around 50% pullback between the top of 57 and 54. So it's really tied to one sector, and this sector is financials. Here we see it on a longer term basis. Financial in the last 3 weeks failed to break their down trend line, and they, of course, underperform quite a lot the S&P 500, that's the orange descending trend line. But we see that underperformance came at the same time as the black line, which represents the yield on the 10 years, which is moving down. So what happened is basically a contagion from what's happening in the US and in Europe about financial sectors, and the fact that the ECB is buying corporate bonds and pushing yield on the bonds down, which is influencing as well the US yield. And the correction seems to be limited around financials.
So I'm guessing you're bearish on Europe.
Well, the Europe financials have been moving down a lot, and we see that on the Euro stocks, we moved basically from the top of the trading range around 3,100 to the bottom of it, 2850, even lower, 2800 now. But we should be careful not to be too bearish right now because we are close to the lower Bollinger Bands, on a weekly basis, and as we see here, around 27. And here we have already a weekly momentum which is already down. So here it would not be a surprise to see Europe rebound a little bit, maybe less than the S&P, but a little bit as the S&P rebounds.
And what about Japanese equity?
Japanese equity has been too quiet, and then suddenly, with the last 3 days, it broke below the 16,000 levels. So it's a little bit ambivalent. If we remain below 16,000, then we could move down further to 15,000. If we move back up, as I expect with the other markets, if we have this rebound in Europe and the S&P, then we should be back in the trading range.
Well, maybe you're for emerging markets then?
Well, what is interesting, if we look at India, which is an example of emerging market, is the fact that not only India is outperforming the other emerging market, but it's not underperforming the S&P 500 because the relative strength line, the black line here, is flat. So usually, during a correction, emerging market would tend to be more volatile and underperform. That's not the case. That means that this is really a correction which is related to developed market. Here we see for India that we are still in the uptrend above the rising trend support, and here we could expect it to rebound as well from the level that we have here on the blue line, which is also a nice level which represents at 26 the former ceiling. So we are here basically at a point where we could also have a rebound. It all boils down to what's going to happen today on the S&P 500 and if it can confirm the spike we had yesterday and a rebound today.
Thank you for joining us in the studios once again, Bruno.
You're welcome, Kaz.
That's all for today, but you can catch up on Bruno's previous programmes by clicking on the Dukascopy TV website. Goodbye for now.